started. So thanks for popping on tonight, you guys. We have an excellent speaker that's going to be talking a little bit about taxes and best business practices really on how to run your real estate business. So we have Scott Hall here, who just so happens to be my brother-in-law. And he is a tax preparer that he's homegrown, grown up in Washington State, grew up in Federal Way, lived in Ording for many years, and is now living out of state, but doing a lot of tax preparing for people here in Washington. So I know I've got several questions for him tonight, but he's got a couple things he was going to touch on as we, as you're structuring your business and running your business, and maybe this is review, or maybe these are things that you can, take a note and apply to your business. And then we'll end with questions at the end. Feel free to drop a question in the chat. I'm sure Scott will either see it or we'll get to it at the end and we can kind of go from there. So Scott, I'll let you take it away if you're good with that. And then I'll ask questions. I'll pepper things in as I see them come through in the chat.
Sounds good. I appreciate it. I appreciate your guys' time today. I know that there's lots of questions. This is one of the fun parts about my job, is that a lot of people who are starting out, or even some seasoned people, questions. You guys are the professionals for home stuff. If I have any questions, I always come and I bring those to Rochelle and Shannon. So I'm here to answer any questions I can, business wise, tax wise, to help you guys out. One of the things that I really like to kind of focus on, or start out with at least, is as real estate professionals, you have a lot of opportunities for how you structure your business. Shannon, do you know, do you guys have an LLC? Do you guys have an SCorp? What kind of business do you guys run?
For best choice, so we've got several businesses, I would say, on how we run it. But what we tend to tell people is to truly refer to a tax preparer or their CPA. But if you're running your business, to have an LLC with an SCorp conversion. That tends to be what most CPAs have given our agents advice to do.
Absolutely. I'm glad that they've told you that. That's 100% what I would suggest as well. You as real estate professionals, if you want to call yourself a real estate professional, one of the first things you should do is have an LLC. I think no matter what level you're at, whether you're beginning, middle, or end, your business should be an LLC, whether that's a sole proprietorship, a single member partnership, or an SCorp. That LLC will give you some separation between liability between you and your business, so that you can truly function as a business. One of the good things, again, as starting out as a real estate professional, you start that single member LLC. If you form it correctly, when your business starts to take off and you're booming, making those $100,000, $200,000 paychecks, we can convert it to an SCorp, and that's when some of the real tax savings gets involved, and you can really take advantage of the benefits of an SCorp.
So it's based on how much money you're bringing in, Scott?
Not necessarily. So this is where some of the industry kind of varies a little bit. There are some added costs. So a sole proprietorship or a single member LLC, when you do your taxes, just goes onto a Schedule C, which is then attached to your personal taxes. It's just another form to your 1040, where if you switch to a partnership or an SCorp, you're actually doing a second tax return. So there's some added costs and some added requirements with those changing in business entity. SCorps are usually a bit more professional. Most businesses, I would say, today are SCorps. If you're making anywhere between, I'd say, $25,000 and $30,000 a year, you're wasting money. You're giving more money to the IRS than you should. That money should be going in your pocket and not to the IRS. It's 100% legitimate. They would tell you the same thing if you talk to any IRS auditor. they tell you S corps are the way to go to save your money on taxes and also be more in compliance with that business. So let's see. Yeah, there's definitely a lot more benefits when it comes to that S corp functioning as a business than a single member LLC on that Schedule C. But again, those costs kind of do start to eat into things. So there's a give and take. There's other issues I know coming up. You know more than I do. The industry is it's unknown, right? Nobody has a crystal ball. Nobody knows what's going to happen in the future, but we're all trying to kind of do what's best for us moving forward. Sometimes it's, hey, does it really make sense for me to stay in this industry where I'm only getting this much as a paycheck with a 1099 versus going to a job where I get a W-2? That W-2, the W-2 1099, there's some gives and takes there as well. So again, talk to a tax professional when you're trying to make that decision of, is it going to make sense for me to take a W-2 job or stick with this 1099 and take advantage of some of those options and opportunities that it gives you?
So quick question, I just want to address Izzy's point. So what would you say, just ballpark range, would be the difference in terms of cost between an LLC, setting up an LLC initially versus setting up an S corp? Obviously there's city things to bear in mind as well, but based off of, just general costs, what should people budget for?
Yeah, so this is kind of one of those, you're going to get what you pay for kind of things. I had an attorney that I was working with that said, who trusts the government? Raise your hand if you trust the government. Because if you trust the government, you can log on to their website and they will walk you through how to set up a business. You can do it for free. You just pay their fee and you're good. If you don't trust the government, pay somebody that has spent the time to understand what's required, and they'll do it right. They'll do it right the way, hopefully you have a discussion as to what you want your business to look like so that is all set up correct. The costs, again, range depending on the person that you're doing it with. I've seen anywhere, as low as $400 all the way up to $1,500, just depending on who you do it with. Some people like to set up legal documents to have an attorney that draws up all this paperwork. Other people just get the business set up so that it's legal and you can move forward with it that way. Whatever you feel comfortable with is kind of that range that you get. So
perfect, thank you.
Yeah. And then there's some, once you get the business up, your mind's just blown when you start a new business, right? You don't quite know what's next. You don't have somebody there telling you each individual step to do next. But if you have somebody who's on your side, they can at least lead you in the right direction, get you, tell you need your articles of incorporation, you need everything like that to go get a business account set up. Then you have the fun budgeting and bookkeeping rules and laws that you get to follow. And depending on who you work with, it really depends on how comfortable you are with them, what they require. A lot of companies will just use QuickBooks, some accounting tools, something like that they can, at the end of the year, they can generate a profit and loss balance sheet, some of the bare minimums to give to their tax professionals to help them produce their 1040s or 1120Ss. Other things you can do, you can have, if you have that business bank account set up, a lot of clients that I have who are just starting out, they don't want to put the money into the software or that kind of stuff yet. So I sit down with them and we say, okay, this is a business bank account. Everything that goes in, everything that comes out is a business expense or business income. And so we can sit down and kind of go over some of the bookkeeping, the requirements that will help you, save money legitimize things to the IRS and kind of keep them happy that way. Budgeting can either really make or break your business. I have a client that they have $400,000 coming in, but they have $500,000 going out. It doesn't help your business if you're not sitting down and figuring out what the costs are versus what your income is coming in. So it can really make a difference as to who you're working with, how comfortable you are with them, your understanding and their understanding. My goal as a tax professional is I can do it all. If you want to pay me and you won't have any, you just want to wipe your hands of it, I'm happy to take over and take care of you, and we can just talk every month and get it done. Another option is that you take the reins, and as long as we're communicating and we're on the same page, everything's run correct. As long as the IRS is okay with it, I'm okay with it. My goal, again, as a tax preparer is to give you the information. It's your business. You run it the way you want it to. I have some clients that are more than willing to push that red line, and they want to take every expense they possibly can. And I have other clients that are just like, I don't want to do anything that the IRS is going to throw a red flag at. My job is to share that information with you and help you feel comfortable about your decision and know that I'm in your corner no matter what.
Well, and I think that's certainly true, Rochelle. I mean, we've seen and heard those stories where some of our agents don't know whether or not they are profitable, right? I mean, when you're spending money on advertising, especially lead generation efforts, it's hard to know, especially if you don't have your business set up where you've got that profit and loss. You know, it's like, what is even a profit and loss? A lot of people, they get into real estate and they've never run a business before. They don't even know what that is. You know, knowing whether or not your income and your expenses actually make it so that you are profitable. So yeah, I would echo that. I think it's important to have some sort of budget in mind. It also tells you how much you can spend, you know, into getting more leads, getting more prospects. But also the bookkeeping aspect, don't be scared by it. I think that some people think it's overwhelming and it's too much. And there's people to help you with that. There's people in our circle that can help you. And in terms of planning, I mean, there's the DIYers of the world that will bookkeep for themselves, which is fine. But I think people like Scott, who are tax preparers, will very much appreciate if you separate the personal from the business, because it starts to get really, really muddy very, very quickly. So one of the benefits of having your LLC is that you can set up that business account. You should be able to roll into most banks in this area. Find one near your house that you can roll in and then set up a business banking account. It's not expensive. It's an investment in your business, I think, for sure.
And a lot of banks actually give you a lot more tools in that budgeting, bookkeeping option as well. When you sit down with them and say, hey, I'm a new business, they kind of facilitate some of those, some of that knowledge to you as well. So it's definitely beneficial to take advantage of that business banking account.
So let me throw something at you, Scott. So if I'm sitting here and I'm this is not me, right? Because I've got a few different companies I'm running, but let's just say I'm a new agent, I got my license and I'm not quite ready to do the LLC because I'm brand new to the business. I don't really know what my expenses are going to be. And I'm not ready to do an LLC yet or an SCorp. I mean, what would your advice be to somebody like me who's just getting started?
Honestly, I think that anybody who has 1099 income is ready for an LLC. It is a very basic, very minimum costs, but it benefits you so much even in the beginning. I don't think there's too many reasons that I can think of that if I have anything other than W-2 income that I wouldn't want an LLC set up. And if you're just setting up a single member LLC, the costs on that isn't too high. It's the requirements and that kind of stuff aren't as severe as like an SCorp, that kind of stuff.
Okay, so you have no problem. If I was a new agent, just contacting you and then you could help me set that up. And what would that?
Absolutely. Absolutely.
So for a new broker, is it just based on the city fee, or how would my cost be? I just want just a basic one and get me going. Just get me started.
Yeah, bare bones. What you're looking at today for an SCorp, or sorry, for a single member or a sole proprietorship.
Yeah.
Whatever the state cost is, I think in Washington it's $200, and that's across the board. And then you're looking about the same, maybe a little bit more, $250 for the
For you
other
to do it
fees.
for me. Okay, so
Right.
it's basically I'm out the door no more than probably $500 for a single
500
member.
bucks. Right.
Okay.
And then the
that's just-
benefits of that is, I mean, if you get one paycheck, $1,000, you're probably going to break even with those costs.
Okay. Yeah, and Izzy, we do not set up the LLC. We do set up the sole proprietorship. So that is different. An LLC is a bit more, it has more to it. Can you explain the difference between sole proprietor versus the LLC, Scott?
So a sole proprietorship is a type of business like a partnership or an SCorp. LLC is the legal the legal process behind it. LLC is a limited liability company. So what you're doing is you're essentially creating a separate entity that has its own EIN. So it's like a social security number for your business. So we have two separate entities. The main reason for any kind of LLC is that separation of liability. If anything were to happen to your business, they can't come after your personal belongings. If you were to, do something from your business, they can't come after your personal home, your car, your kids' college fund, any of that kind of stuff. It's separation of liability.
Okay. And yes, a lot of questions about how to set it up, Scott. So I'm sure your phone will be blowing up on a few people that need to get this set up. And I think the holdup is they don't know much about it. And then the cost is like, oh, do I invest? Do I spend the 400 or 500 bucks to get this thing set up? Or do I just wait until I get my first commission check? What would your advice be to somebody like that?
If you have any intentions whatsoever of getting any funds, I'd say it's always better to set it up ahead of time and be ready for it than to wait and even if you don't need it, it's still better to have it and not need it than need it and not have it. Okay. Best Choice Realty, I know, would issue that check to the business. It's a lot easier for that check to go to the business than go to the personal and then have to convert it over to the business. It gets kind of messy and the IRS doesn't really do that.
There's more red flags on that, something like that, where you're moving things around. Yeah.
Absolutely.
And then the other question for the new broker would be, so do they come to you with like a spreadsheet? What is kind of your favorite way to, I know QuickBooks is one, but not all new agent or not all new brokers have QuickBooks. What is your best format for getting that information over to you?
And it just kind of depends on how involved you want to be again. So the people I deal with, I give you a sale profit and loss sheet. You're more than welcome to take that bank statement, go through it and categorize each of those expenses and then submit that Excel sheet back to me.
Okay.
Other people, again, who don't want to be involved, they don't know the details. They just give me their bank statements and I dig through their bank statements. It's a little bit more involved for me and a little bit more time consuming. And there's a little bit more questions like, this expense is, I'm not quite sure what this is. Where did this come from? So it's a little bit more work on my side, but I do that for plenty of my clients. So
it can be as hands-on as you want it to be and as hands-off as you want, but obviously the cost is going to dictate that is what I'm assuming. And you've worked with some of our Best Choice agents in the past since we did this about 6 months ago. And I know that they were all very, very happy with your services and just the time you took to go over some of the questions that they had. The question that Sukumar had is it ideal to pay a salary to yourself from the SCorp? If not, how do I take money from the business account? I'm trying to understand that.
So this is kind of the fun thing, depending on the tax preparer you go with. Myself, I don't want you to not be able to pay your bills. I don't want you to go hungry. The way I do stuff, if you're your own business, you're your own SCorp, We talk monthly to where what we'll do is we'll set up a payroll where all we're doing is paying those payroll expenses, but your actual paycheck, the money that you take, you can take out of your bank account at any time, any point you need it.
And it'd be like an owner distribution kind of thing, right?
Kind of, yes. This is where it kind of gets into the weeds a little bit. Everybody's going to be a little bit different. Some people, again, are going to be very specific and saying, I want to make sure that this is how much I'm paying in my taxes. Other people are just saying, generally this is about what we're going to get to. Technically, SCorp, if you're a single, if it's just you can take the money out at any time. It's just the tax preparation, the planning for tax that we want to make sure that we're getting that taken care of, so we're not getting hit with any penalties or other requirements. That if you do have an SCorp, one of the requirements is that you run payroll, but it's not the same kind of payroll that Best Choice does. It's just a payroll to make sure that we're prepaying some of those taxes that are required.
Got it, Sukumar?
Thank you.
Okay, wonderful.
Thank you.
What kind of proactive strategies would you recommend for real estate agents that are in LLC or SCorps? Based on how much money they take in, what's kind of a good rule of thumb as far as that goes? I know we've seen ranges of anywhere from 28 to 38% withholding. Is there some sort of percentage that you would recommend for those of us that are kind of in the middle of this?
That's where a tax preparer comes into play, where my goal is that when payroll is being run, that I'm talking to my clients. I just saw a question about how often payroll needs to be run. It needs to be run as often as income dictates. So if I have a new broker who's just starting, chances are we really only need to run it maybe quarterly. And sometimes running it just means putting a bunch of zeros in and saying we ran payroll. For other clients, we run monthly to make sure that money is getting set aside, getting sent to the IRS. The minimum requirement, I believe, is quarterly, where we need to be filing something, even if it's zeros. We file that quarterly. Okay,
very good. It always comes better from you, Scott. They do this. I don't. I wear lots of hats, and I'm not the tax expert. Certainly not into the. I turn it over to you before I would actually tackle any of these questions. So
yeah, they can be pretty in depth for sure.
So really, you can't give me a range, right? I'm really shooting for something.
Yeah. Because again, it does vary quite a bit, because what we're actually paying on is our end payroll. So if you're starting out, I have a client with Best Choice Realty. She is a broker, but she also does staging. So she got a lot of income this year, but a lot of that income is going to start up some staging, her staging business. So right now she might be bringing in $30,000, $40,000, $50,000, but at the end of the year, she might just be breaking even. So it really depends on what we forecast the year to look like.
Okay. All right, Shannon, back to you.
I think for a newer agent that is coming to the industry, that we get asked this sometimes, actually quite a bit. Especially because they're starting from, and they're converting from like a W-2 to a 1099. And they're not used to federal taxes not being withheld from their checks. So what would you say mentally, so that they can kind of like not spend it before they get it kind of thing? What should they be estimating? It can be a larger range, it doesn't matter. But what would you say to a newer agent in that situation that they should mentally prepare to kind of set that money aside for taxes? What percentage from a case check?
So if all you have is income and you have zero expenses, let's say you're running a business where all you're doing is bringing in money, and we have no vehicle expenses, no office expenses, nothing like that. Anywhere between, let's say, anything under $12,000 is tax. There's no tax on it. That's the standard deduction If you're single, if you're married, is $25,000. So if you're a couple and your only income is this $25,000, you don't pay any taxes on it. You don't need to worry about anything. Anything over $25,000, I'd say a good rule of thumb is set aside 10% until you're getting into that $50,000 range. At $50,000, you might want to bump it up to 15%. And then anything over $100,000, you probably want to bump it up to 25%.
I see. Shannon got the answer from you, Scott. All right.
Yep.
See how this goes. Keep going, Shannon.
Yeah, I think that's all the questions that I personally had for Scott. So I know we've got a lot of people here on the call. If you've got a question, go ahead and *6 to unmute if you're from your phone, or just unmute your line. And I'm sure that if it's a generic enough question, I'm sure you can answer. If not, it might be something to take offline with Scott. So go for it and unmute your line if you've got questions, or if you're like, gosh, I'm needing a different perspective from a different tax preparer. Go for it.
Yeah, so if I will set up an LLC, contact Scott, and what's your information? Contact information, Scott. Is that how we're gonna do it?
Yes. So my contact information, my phone number, if you want to write this down, is 801-857-6053. And then I have a secure email as well. So if you have any personal information questions you want to send to me, you can send it to scott@rustypenny.tax. That's rustypenny.tax.
And I just popped it in the chat so you guys can copy and paste it or take a screenshot or whatever.
Yeah, feel free to text that phone number, the number. If you leave a message, I will get back to you hopefully 24, 48 hours. And the emails, I respond as soon as I can.
Should I buy it? Should I buy an investment property, Scott? Would that help?
That it depends on what your portfolio looks like. If it's an aspect of your portfolio that you could benefit from, you guys know the market better than I do. Is it a good time to buy?
Yeah. Yes. So basically, I have to look at my financial picture and figure out where my buckets, so you do a little bit of analysis that way too, as far as a tax preparer? Okay.
Yeah. So I also, part of my background, I was a financial advisor for about 15 years. So I do have a little bit of that as well. So
great.
Mm-hmm. So you worked with the 1031 people too, right?
Yeah, definitely do a lot of 1031s. Question for you as tax or as real estate professionals: are you allowed to do a 1031 of your primary residence?
No.
Oh.
Okay.
No.
I had a couple clients come in the other day and say we were told that we could do a 1031 of our primary residence, and
no,
that's news to me if it was. So
no, they haven't changed the law. In fact, they've been trying to fight to keep the 1031 exchanges alive for investment properties. Yeah. So no, it's not trickled down into primary residence at all.
Yeah, that's where the fun 121 exclusions come into play, is those primary residents. So
right.
If you guys have questions, or you have clients that have questions, those are some of the things that I 100% am willing to answer. I don't charge for any of that kind of advice, because it is complicated. It is scary when somebody's talking about a 1031 or a 121 exclusion. We want to make sure that they have the correct information and that they're taken care of, and not given incorrect information, and come tax time they'll pay a pretty penny for it.
Yeah. What is your rate for consulting, Scott?
If it's your guys' clients, I don't charge. I want to make sure that they have that information.
Okay, great. And then do you have a website that we could share? I know you've moved over to your own company, right? So I don't know if do you have a website that we can share with people or no?
Not yet. That's forthcoming.
Right. Great question, Mary. So yeah, just having your contact information, having the resource with your background has been really helpful just to kind of deal with a lot of the questions that many agents have. And they're a little bit too shy, or they've done it themselves for so many years. And I think it's like, at some point you got to realize Washington state's got so many different type of tax, strategies and benefits. And it's just hearing you say, I mean, LLC is the way to go. I mean, you would say that even if just one transaction, where even 10 years ago when we had this kind of conversation, it was more of like, well, you've done some sales, then you should get an LLC. It's kind of, with the way things have changed and morphed in our state, I think it would be super important just to get that going. So that should be a goal probably for everybody on this call. If they don't have an LLC or an SCorp set up, that would be the next step. And either you doing it yourself, going to the website, or contacting somebody like Scott who can kind of walk you through, and it's quite affordable. We have had other tax preparers, Scott, that have charged a lot more, but there's a lot more obviously services, but that's not what most real estate agents are needing. They're looking for just maybe some guidance on knowing how to fill it out, right? So they can get it done.
Yeah.
And then going and talking with their bank. That would be the next step, right? And getting
Absolutely.
that business banking account set up. When you do have that 2 steps done, the LLC or the SCorp finished, and then the business banking, then it's really a simple call to our accounting department or to Shannon directly, and she can make that adjustment or change on your tax, so that when we do pay commission, we're paying to the correct place. That's kind of frustrating for you, Shannon, right? What I've heard is,
yeah, we get to the end of the year, and every year when we get to the end of the year and we pull those 1099s, we literally go down the list, and I see some of the numbers, because you see how much is being taxed to these entities. And when I start seeing sole proprietors, I'm like, I last year I personally called several people, and by making that phone call and setting it up in previous years, I've able to save them a lot of money, but I can only do as much as I can, guys. So,
I have a client.
Yeah.
Sorry, I have a client, little story there. Sorry.
Sure, go for it.
I had a client that I just picked up who, she just a single member LLC for the last 3 years. She had over $800,000 of income coming in. The only tax she ended up paying for those 2 years, she ended up paying $35,000 in taxes. The only reason she paid that tax was because she wasn't an SCorp. If she was an SCorp, she would have made money. She would have gotten tax refunds. We could have saved her $30,000 if she had just talked with a tax professional.
Yeah, I know. It pays to rely on our professional friends, right? So I would say, yeah, I'd echo Rochelle and Scott, invest in your business. This is truly a business that we're running, especially as we're kind of just see the market soften a bit. Now's the time to take advantage of those tax incentives. You can't hold it off any longer. And so I think now is the time, especially with the way that the market is kind of running a little bit up here. So thank you so much for taking the time tonight, Scott. I sure do appreciate it. I know you're busy too, with all that you have going on, but for those of you that are looking for his phone number, again, his phone number is 801-857-6053. And I'm sure we'll have his other information. We'll have the recording posted later, so you guys can refer to this later. So thank you so much, you guys, and stay tuned. We've got some other trainings coming by this week. I know Candace has some good ones, I think, coming up on Wednesday, so stay tuned for those. And we've got some good ones, I think, on CMA coming up, because I know we've got a lot of questions about price reductions and things like that. So give us a call if you've got questions in the meantime, but stay tuned for those other important trainings too. So,
all right,
thanks so much, you guys. Good night.